What is buy high, sell low? Buy low, sell high. If buy high, sell low, will be damn jialat lah. Anyway, if buy low, sell high, I think all of you seen this Pauline Teo advertisement before. Just to be fair, I have never attended her smart investing courses before, cause I feel I don't need to pay her so much money to learn all this. So just to share with you my take on buy low, sell high. I have experienced one, mind you. The first step to buying low, selling high, you must do your research. So there's a few particular points that you need to research, okay? Number one will be the asset of the company, the debt of the company, how much cash it can generate over its effective lifetime. So to be safe, we usually take 10 to 20 years or even 30 years, but just to be the safe side, right, you can use 10 years. Take a look at this pandemic. Every 10 years got one pandemic. How? So just use 10 years. Okay, so the number one mistake that people make, right, is to look at the face value of a stock of a company. Example, Amazon, right now is selling at $3,162. Netflix is selling at $498. Naturally, you think that Netflix is cheaper, right? But that may not necessarily be the case. I'll explain to you later. Another good example is this. A year ago, right, Sembcorp Marine was selling at $1.35. AEM Holdings was selling at $1.90 per share. Okay, now a year later on, which is right now, Sem Marine is 17 cents, 0.17. Yes, that's almost like 10 times lower. How about AEM Holdings? It's almost double already. It's at $3.55. And those who follow AEM closely, right, they could have probably profited over 1,000%. Okay, that is 10 times or more. Okay, so let me prove to you why step one, very importantly, is to do your research properly to find out the asset, the debt, and the cash value a company can generate over its lifetime. First, we'll go through asset. Now, the most important thing for me, myself, my personal opinion will be the operating cash flow. Why? Because, right, a lot of figures inside the financial can be manipulated. Okay, what are the methods for manipulation? There are some of the few ways, like all this shown in the screen right now. Then for everyone's sake, I will not go through them. Okay, so just to show everyone this example, this is the particular line I'm looking for in any consolidated statements or financial records. That is cash generated by operating activities. Profit aside, very importantly, we need to look at the debt. There's two types of debt. One is long-term, the other one is short-term debt. So what can be long-term debts? Can be like borrow from bank, the capital leases, etc. So I consolidated what is long-term debt and short-term debt in the screen below. Y'all can take a look. Accounts payable, wages payable, even bonus payable. Some CEO very tamsim, very greedy, one few million one. Next, we need to find the present value of a current asset or stock. Okay, now present value PV is the current value of future sum of money. To make it simple, okay, it simply states that the amount of money today, like your $2 today, is worth more than the $2 in the future. Like example, 10 years later. Correct or not? Just example, you buy fishball noodles, $2 now. Next year or 10 years down the road, where got $2 fishball noodle? Cannot be one, maybe $4. So how do you calculate PV? I have an example which I will show you later, but for now, you just take a look at this formula on the screen. So do you know why my first step will be to find the asset, debt, and PV of a company?
I don't know.
Okay, it is to find the intrinsic value of the stock or asset or company. So why is intrinsic value so important? So do you remember these four companies that I showed you earlier? So now I'm going to do an example of how I calculate or determine what is buy low, sell high. For the next 5 minutes or so, I'm going to share with you how do I calculate intrinsic value. I'm going to start with Sembcorp Marine first because it dropped an epic 90% stock value over the past year. So Sembcorp Marine, just a brief introduction, they do offshore, marine, barges, etc. So you can read up all on their website. And then this is the consolidated statement which you can download. It's public information. Okay, now you take a look at the net cash for operations, and you'll realize that even before adding the debt, they are already making a loss. So it really failed the fundamentals of a long-term investment or a good stock, at least in my very opinion. So for those fellow traders who know how to play and trade and buy and invest, you would have shorted this and earned a lump sum from it. So even at 17 cents right now, if you ask me would I buy, no, just in case it go bust, unless there's a buyout or what so, but it's all rumors and I do not have insider information, so I will probably just skip this. So up next is good old Amazon. So for those who do not know what Amazon do, I think you are from Mars. Anyway, I'll just go straight into the accounts first. So Amazon is really very healthy with an operating cash flow of 38.5 B, investment of 24.3 B, and financing of 10.1 B. And just for information, a good portion of the financing usually will be the loan repayment and interest. Okay, so this is the meat of the whole video, and this is the intrinsic value calculator which I created very easily using Excel. Just probably 5 to 10 minutes you can finish the whole thing. Okay, I'll share with you all the formulas later. Okay, so this is the Amazon stock, right, that I was talking about. And this is the operating cash flow. Okay, all this information, right, you can actually plug it or find out from the latest financial report from the website, Amazon official website or any other analyst website. Okay, the total debt, right, short term you won't be able to find it usually. They will just hide it somewhere, you know, under payroll and everything. So usually they will only put the long term there, and they won't break it up into very detailed information, but you can actually easily get a number and plug it here. Now next will be the cash and investments, which you can easily get it from the financial also. Now for this cash flow growth rate, to be on the safe side, right, because you can find a lot of analysts reporting that how much growth rate they roughly expect for Amazon, etc. So to be safe, right, usually I'll put it 1 to 3 years is very good. Then after that you will taper down, and 6 to 10 years you will normalize. Normalization, right, sometimes certain company is really bad, it can even go into negative. So for Amazon, since this is a really very good stock or business model, so I'll just put it as very good numbers. Anyway, you can easily find that the average last couple of years how much growth it did. Okay, now next will be the intrinsic value. Number of outstanding shares. All this is in millions, so this is 512 million number of outstanding shares. Again, you can find it everywhere in the website, you just Google for it. Okay, this is the total number of figure added from this over here. Okay, so how do I get this number? Okay, this is the cash flow, right? How do I do it? So first is the estimated cash flow. So I get it, this is the actual you can take a look at the formula. So what is F3? F3 is actually the current cash flow, right, plus F3 times F7. So this is the growth rate in 2021. Now it's 2020, right? So next year, right, let's say we grow 45%, I times, right, I'll get this number. So next will be the discount factor. This is, if you remember the formula that I gave to you, right, earlier, how to calculate PV. So this is how I calculate PV, right, which is 1 plus the discount rate. The discount rate usually the Angmo, the US people usually take 3 to 4%. I could usually take around 6% or even higher, depending on the type of business it does. So for Amazon, I take it as 6 because of the pandemic. All thanks to the pandemic, I reduced the PV rate for this. Okay, so I get 106%. So the actual formula will be the estimated cash flow divided by this 106%. So again, 1 plus discount rate to the power of 1. Why? Because this is 2021 year. Okay, so next, right, this one will be to the power of 2. Okay, 1 plus 6% to the power of 2. Okay, so until the 10th year, you're to the power of 10. So, and then you use this value, estimated cash flow divided by this. Okay, so how do I get this figure? This figure will be this value after discount plus F7, which is the growth rate again, plus F16, which is the estimated cash flow. Okay, so this is how I plus and times and whatever. In the end, right, all these figures, okay, will be the present value for the next 10 years. estimated calculation. So the intrinsic value, right? How do I get it? Okay, I'll use F13, which is this overall present value of 10 years cash flow, right, divided by outstanding shares, which is 512 million. Okay, so this is the intrinsic value. So I need to reduce the debt per share. Debt per share is the long-term debt, but it might increase or reduce, but we can only take a reference from this figure. Okay, then the cash plus investment again. All right, how the value is again the F5 over here, then divided by a number of outstanding shares. So this overall value, right, will be 3401 plus $83 minus 45. So this is the final intrinsic value. I'm not sure today what is the price for Amazon, but I think right now it's about $3,000 to $3,200. I haven't seen yet updated one. So probably this is the intrinsic value, and this is on the safe side. So yeah, I'm not wrong, right? It still has room to run, but not a lot. But of course depends on the final quarter how much it's reporting for the cash flow. It might increase by a lot, so it depends really. So the next one I'll give the example of Netflix. Netflix is not exactly the best you can give. Why? Because it is a completely different beast by itself. Because for the past many years, right, Netflix have been running at negative. I repeat again, negative operating cash flow. Why? The money they earn, they all use for marketing. Pump and market. That's how they dwarf Singtel, M1, Singtel and StarHub. All the Singtel, StarHub, they have their marketing thing, right? Theirs is only catered to local, but Netflix different. They cater to the whole world, global. So this is how they do it, except for China, of course. Then so they use a lot of money. So there was a report, later I will share with you. The report says, right, actually for this year, FY20, that means 2020, there will be an explosion in the operating cash flow. Why? Because they do not need to advertise so much, and that was the report was 2 years ago. So hats off to this guy. He really dare to play. So anyway, the intrinsic value that he calculated using similar formula is $500. Okay, about $500, which is about right. But okay, so right now there's an explosion. Now for Netflix, right, it's very hard to calculate. Why? Because right now it's really at positive cash flow until this quarter. So this is until Q3 only of 2020. We don't know Q4 2020 what will be the operating cash flow. Will it stay on to be bigger or more? I'm not too sure. So all this will have to be estimate. Okay, so this is just to show you this is one of the important key points to finding the intrinsic value, whether how to buy low and sell higher. Of course, there's a lot of mega factors, okay, which I will share in the future, and how I do trading. I think I really need to summarize right now, because it's almost 15 minutes for this video already. There's so much things I want to share. Maybe I'll share with you the trading and then the 4 other types of marketing gurus in my next few videos. So one very important point for this buy low, sell higher. Another key takeaway, right? Okay, always remember, you don't have to really care about the PE ratio. That means the earnings ratio, right? Then you can really ignore one, because you can realize, right, when I calculate intrinsic value, there was no mention of PE ratio at all. Actually, to me, it's really not important. At least this is my opinion. So see you in the next video.